unethical but legal tax loopholes that wealthy use almost every single year. As you know, I own a tax office and file taxes. Tax season is coming up. File with me. Anyways, moving on. So these are different loopholes that are built into the tax code. And we're going to discuss them because if the wealthy are using them, maybe you could benefit too. If someone qualifies as a real estate professional, they can use real estate losses to offset their income and write off their entire income, even W-2 income. That's how you turn a bill into a refund. Borrowing against assets, tax-free. They don't sell their investment properties. They don't sell their assets. They borrow against them. Loans are not taxable. Think of it as using it as collateral. They can literally live tax-free while their assets still continue to appreciate and go untouched. 1031 exchange. This one is one of the most powerful and probably most unfair. So when a regular person sells their house, they can make $10,000s, hundreds of thousands of dollars, but the IRS is going to tax that. That's called capital gains tax. But when an investor does it, they can use 1031 exchange to get out of it. They take the money they make on the sale of a property and immediately put that towards the purchase of another property of equal or greater value. They avoid capital gains tax. They avoid any depreciation. They avoid paying income tax on the sale. The profit rolls forward and the tax disappears permanently. And the best thing is it's legal. And there's no limit. You can do this property 1 to property 2 to property 3 to property 4. No limit. And usually they go borrow against that property to pull that money out, and you can't get taxed on a loan. Accelerated depreciation is another one. And this one is kind of glamorized on social media where people are saying, go buy a Range Rover and write it off for free. That's really not how that works. What it is you have to have a business, and you can buy property, you can buy equipment, you can buy cars. And with accelerated depreciation, you write off the entire cost of that asset or whatever you bought that year. So say I made $250,000, but I went and bought a $200,000 car. You can wipe out $200,000 and write off that entire cost. So that brings your income from $250,000 to only $50,000. Think about the tax decrease. That is a great loophole. Another one that is kind of well known is you can pay your kids. Again, you have to have a business. You cannot do this shit if you don't have a business. Pay your kids up to a certain amount, and whenever you pay your kids, they hardly have any taxes on that anyways. But that decreases your AGI, your adjusted gross income. And that is the goal, to get your AGI down, your tax liability down, so you don't have to pay the IRS and Uncle Sam. Where there's a will, there's a way. And wealthy people have figured it out. And honestly, I have too. That's why you should file with me. But yeah, did y'all know about these? What do you think about it? There's so many more that I can go on and on about. Love you. Bye.